Hello and welcome back to Introductory Financial Statements Modeling course. In today's lesson, we'll be modeling equity, cash, and dividends. The equity is comprised of share capital and retained earnings in our model. In share capital is money invested as equity at the start of the project. The share capital balance, according to the case study, is 83.3 million at acquisition, and there will be a share capital redemption at the end of the project's life. Retained earnings is accumulation of net income less dividend payments. The formula for retained earnings is beginning retained earnings balance plus net income in that period and less dividends paid in that period. According to the case study instructions, the retained earnings balance at acquisition is 20.7 million. And finally, retained cash is cash accumulated during operations. Retained cash formula is beginning retained cash balance plus cash flow available for dividends in that period and less dividends paid in that period. And in our model, the dividends payout is allowed if retained earnings and cash are positive, and the formula for dividends payout is minimum of retained earnings or cash, whichever is less. This is a conservative dividends payout policy, and this is how it is modeled in project finance models. So let's get back to our model and start working on equity, cash, and dividends. Let's create the equity sheet from our template sheet. Let's rename it equity. Let's call the whole block, the whole section as equity, cash, and dividends. And the first item that we'll be modeling will be share capital redemption. And share capital at acquisition is 83.3 million. And let's mark this as a placeholder. Next, we'll need the last forecast period flag. Let's get it from our tax sheet. Select the whole row, copy, and then select the whole row and paste. And share capital redemption, well, the formula is going to be the share capital acquisition multiplied by last forecast period flag. So share capital at acquisition, anchor it, and multiply by last forecast period flag. Copy across and paste. Let's take the sum. Next, let's model the share capital balances. And we will need the share capital at acquisition. Let's copy the whole row and paste. Next, we will need the acquisition flag. Let's get it from our tax sheet. Select the whole row and copy. Go back, select the whole row and paste. Share capital balance, beginning. Let's remove the beginning. And share capital is affected by two things. The first one is equity injection, and it's equal to 0 in our case study. So let's mark this as placeholder. Next, share capital is affected by the share capital redemption. So let's get it. Copy and paste the link. F2, F4. Copy across and paste. and share capital beginning balance is equal to the share capital ending balance in the previous period, and share capital ending balance we're going to be using if formula. So if acquisition flag is equal to 1, then we want the share capital at acquisition, anchor it. Otherwise, it's share capital beginning balance plus the equity injection and less the share capital redemption. Copy across and paste. Let's add the borders. Next, we can model the retained earnings balance. And according to the case study, the retained earnings balance at acquisition is 20.7 million. Let's mark it as a placeholder. And we will need the acquisition flag, so let's get it from here. And retained earnings beginning balance. And retained earnings is increased by profit after tax and decreased by the dividends payout. So let's get the profit after tax from our financial statements. Let's mark this red, color this red, this will be exported. Copy and go back, paste the link, F2, F4, copy across and paste. And let's copy the acquisition flag and paste formatting. And we haven't modeled the dividends yet, so let's use the placeholder for now. And the beginning retained earnings balance is equal to the ending retained earnings balance in the previous period. And then the ending retained earnings balance, we're going to be using if formula. So if the acquisition flag is equal to 1, we want the retained earnings balance at acquisition, anchor it. Otherwise, it's beginning balance plus the profit after tax and less the dividends. Copy across and paste. Our retained earnings balance is not balancing out. This is because we haven't modeled the dividends yet. Let's add the borders. Now we can model the retained cash balance. And retained cash balance at acquisition is equal to 0. And let's mark this as placeholder. Now let's get the acquisition flag. And retained cash balance is affected by the cash flow available for the dividends and the dividend payout. So let's get the cash flow available for the dividends from the cash flow statement. Mark it red. Copy and go back. Paste the link. F2, F4. Copy across and paste. And again, dividends, we haven't modeled it, so we'll use a placeholder for now. And retained cash beginning balance will equal to the retained cash ending balance. I'm going to be using the if formula, so if the acquisition flag is equal to 1, we want this retained cash balance at acquisition, anchor it. Otherwise, it's beginning balance plus the cash flow available for dividends and less the dividends. Copy across and paste. Again, it's not balancing out. This is because we haven't modeled the dividends yet. Let's add the borders. Now we can model the dividends. And to model the dividends, we will need the total earnings available for the dividends and then total cash available for the dividends. So the total earnings available for the dividends, it's going to consist of the beginning retained earnings balance and the profit after tax. Let's copy and paste the link. F2, F4, copy across and paste. And let's get the profit after tax and paste. So total earnings available for dividends. And we're going to be using the max formula, so max of 0 or sum of these two items, the retained earnings balance and profit after tax. Copy across and paste. And for retained cash, we will need the retained cash beginning balance. Copy and paste the link. F2, F4, copy across and paste. And then we will need the cash flow available for dividends. Let's copy the whole row and then select the whole row and paste. And total cash available for dividends, that's again, it's going to be max formula. So it's going to be max of 0 or sum of these two items. Copy across and paste. Now we can model the dividends, so let's get the total earnings available for dividends. Paste the link, F2, F4, and also total cash available for dividends, F2, F4, copy across and paste. In dividends, the formula is going to be minimum of these two, so mean of these two, copy across and paste. And let's rename these dividends to dividends paid out. And now we can replace the placeholders in retained cash and retained earnings balances. Now let's select the whole row, copy, and let's replace this placeholder. And the retained cash balances are still positive at the end of project's life. And the dividend paid out will go to the P&L and cash flow statement. And the retained cash will go to the balance sheet and the retained earnings to the balance sheet. the share capital to the balance sheet, and the share capital redemption to the cash flow statements. So let's mark this red. Let's copy this and let's go to the financial statements. Let's paste a link here, F2, F4, copy across and paste. Let's copy this and paste formatting. Go back, let's get the share capital balance. Let's mark this red. Copy, and let's go to the financial statements. This will go to the liability in the balance sheet. Copy across and paste. Let's copy the whole row and paste the formatting. Let's go back, and now let's get this retained earnings. Mark it red. Copy, let's go to the financial statements. This will go to the liability again. Paste the link, F2, F4, copy across and paste. Copy the whole row and paste formatting. And let's get this retained cash balances. Let's mark this red. Copy, let's go to the financial statements and paste in the assets. Copy across and paste. Copy the whole row, select the whole row and paste formatting. Now let's check if the assets and liabilities are balancing. So asset less liabilities, copy across and paste, and everything is 0. So we modeled financial statements correctly. Let's go back to the equity sheet, and the last thing left is dividends paid out. Mark it red. Copy. Let's go back to financial statements. And let's paste the link here, F2, F4, copy across and paste. Let's get the formatting. Copy the whole row and paste. And then net cash inflow and outflow. That's going to be the difference between the cash available for the dividends and dividends. Copy across and paste. Select the whole row and remove the yellow fill. Right. So the net cash inflow and outflow, they match the cash balances on the balance sheet. You can see that in the last period on the balance sheet we have 67 something million, and this is exactly the net cash outflow number. So we completed the modeling of financial statements. As you can see, we modeled the P&L, we modeled the balance sheet, the assets and the liabilities. And the assets are equal to the liabilities, so we model everything correctly. Then we also model the cash flow statements, starting with EBITDA, the taxes, and then the dividends. Now let's clean this up, the financial statement sheet. So everything looks okay. Let's go back to the equity sheet and let's clean up this sheet. So let's recap what we did in this lesson. We modeled the equity, cash, and dividends. We started with share capital redemption. And then we modeled the share capital balances as a function of share capital redemption. And then the retained earnings balances based on the profit after tax and dividends paid out, and the retained cash based on the cash flow available for dividends and dividends paid out. And then we model the dividends based on the total earnings available for dividends and total cash available for dividends. So that's all for today, and see you in the next lesson.